It is time that I answer one of the hardest questions as an investor, which is if I could only pick 7 dividend stocks to buy and hold forever, and I mean until the end of my days, which dividend stocks would they be? Now, I'm not only going to answer that question for you, but I'm also going to detail out all of my conviction on each of these picks and give you a fair warning right now that some of my picks might actually surprise you. With that, are you ready? So it wasn't too long ago, or at least I'd like to think it wasn't, when the whole idea of FIRE, financial independence, retire early, was brought to my attention after reading Grant Sabatier's book, which, fun fact, right after reading his book back in 2019 and just before Grant blew up socially, we actually engaged in some Instagram DMing, and for that I can only admire his character. So if you're watching this, Grant, thank you for all of your money motivation way back when up until today. Anyhow, not only did I become insanely frugal after reading Grant's book, but my investing game really took off as compounding capital became essential to, of course, financial freedom. Now, the only issue was I did it wrong, and I admit that. I got so overly excited about investing, especially into dividend stocks that show out dividends for money back into all of our pockets, that I overloaded my portfolio, especially back in 2020. And I'm going to testify now, not all of those stocks were like the dividend gems I would buy and hold forever today. And at some point towards the tail end of 2020, I heard Bill Ackman share that at any given time, there are only really a select few of high quality investments out there. So in other words, don't splurge on everything and spread yourself too thin, which is what I did. Now, in knowing all of that and where I am today, which it really just feels like it's never enough, I want to share the 7 dividend stocks that I would buy if I could only pick 7 Bill Ackman style, with Caterpillar, ticker symbol CAT, up first. Now, this is a company that has several green flags for me, considering it's a global player in the area of construction, manufacturing, engines, and machinery, but more importantly, to think about it just as the fact that construction in and of itself is an industry that will always be booming, as we're all going to chase bigger, better, and more all of the time. And whether it's commercial, governmental, or residential, the motto is out with the old and in with the new, and Caterpillar is there to help with the job. So as we can see, that's been the case for a long while now. But just within the last decade, we see over 311% worth of appreciation despite all of the mayhem that's been taking place. And zoom into just this year alone, we're up by over 15% on the year, trading for $336 per share. Now, I would imagine once interest rates are cut and construction projects really take off, the stock is likely again to soar. As for analysts, they agree, forecasting some more upside, coming up to $341.38 per share. But it's the dividend here that gets me, with a 1.68% dividend yield that just continues to grow by an average of 10% year over year, with already 31 years worth of a growth history. Now, just as much as we like to build, we also like to consume. And in order to consume, we spend. But oftentimes, we spend what we don't have. In order to help us do just that, we have Visa, ticker symbol V. This is really an investment opportunity. Given Visa is in the business of transaction facilitation, not lending, but yet charging fees for every swipe when we swipe our credit cards, that makes over 7 billion credit cards out there in this world an incredibly lucrative business opportunity for all of us, whether it's Visa or the competitors. Either way, we're going to find that Visa is just staying afloat in the green this year, as it's up nominally. But I want you to zoom out with me to see over 420% worth of share price appreciation with Visa over the last decade. And a matter of fact, no one, whether it's me or the analysts, can even see this profit whale going anywhere anytime soon, as we can discover that forecasts are coming in at $315.42 per share. That would be 21% worth of upside from where we are today. Now, I would imagine that once interest rates actually come down, and likewise with inflation, the entire environment's going to change for the consumer, so hold tight. However, your wait will be worth the wait, with a growing dividend here all along the way, currently coming in at an yield of just 0.8%, which is obviously not what you were probably expecting, but here with Visa, you're actually going to get an insane growth rate at 18%, while Visa has been paying those dividends out now for 15 consecutive years without interruption. But of course, the more we spend and consume, the more we all actually accumulate waste, meaning we need a company like Waste Management, ticker symbol WM, to clean up and declutter our lives. So whether it's actual waste removal, recyclables, or dumpster rental, Waste Management is there to help us out, get this cleaning job done. And while it may not be a glamorous investment, it sure is lucrative. A matter of fact, right now the stock is up over 14% on the year, though as you can see, it faltered recently to $203 per share. That's down from over $220 plus not too long ago. But zoom out with with me to see a stock that hit over 443% worth of share price appreciation over the last decade, and analysts just consistently stand by Waste Management, currently forecasting over 10% worth of upside, to which that share price would hit $224.47, all while smart money has continued to load up on the company, buying over 443,000 shares worth of Waste Management last quarter. Now, I want you to keep that good old saying in mind: one man's trash is another man's treasure. In our case, that treasure is a dividend. With that dividend yield coming in at 1.48%, that it's experienced an average of 33% worth of growth over the last 2 decades, while keeping it to an ongoing dividend streak of 24 years. Now, investors, there's 3 of my personal buy now and never sell picks, but before we cover the next 4, I'm calling on all of you to help me chop that 72% of you watching but not actually subscribed down to at least 50%. You have no idea just how much subscribing actually does for me on my end, and in return, you'll have my word to put more into this channel, whether it's stock ideas, macros, or better guests on Masters of the Market every single week. And while you're at it, go ahead and tap on that thumbs up button for me. That just lets me know that you found value and insights in today's video, so I'll keep making more of them just like this. With that out of the way, let's go ahead and get back to it here with United Health, ticker symbol UNH, which is a healthcare provider within the United States. And with healthcare as is, I feel like I don't need to say too much else about this one other than United Health is in fact one of the largest providers within the United States. And moreover, as healthcare coverage is a must, we must pop open that United Health 10-year chart here to see just about 700% worth of share price appreciation over the last decade. But clicking into the year to date here, we can see it remains up on the year by over 8%, perhaps more of an opportunity there right now as it just slid. Either way, analysts continue to give it their thumbs up with United Health, predicting some more upside coming up to $571.47 per share, while smart money continues to load up, buying over 777,000 shares worth of United Health last quarter. And as a shareholder, you're going to collect dividends all along the way here while they collect premiums. Here you are with your dividend coming in at a 1.49% yield that grows year over year on average of 41%, at least over the last 20 years, while maintaining a dividend track record of 31 years. Next up, a personal favorite of mine, Lockheed Martin, ticker symbol LMT, which is the largest defense contractor in the entire world. But most importantly for you to understand, it's all cozied up with Uncle Sam, meaning that it's essentially just going to continue to boom in terms of business, as the United States doesn't have a real spending cap for defense, and moreover, it has to adhere to the limitless defense spending budget should the United States actually want to continue to have a real seat at the world table with actual power. Now, of course, we could just take a quick look at Lockheed's recent book of business to see just everything what I'm sharing is true. And given the multiple wars around the world as we speak, well, we could just see that Lockheed has performed very well in the year, up 24% year to date with a lower PE at 20. But zoom out with me to see over 326% worth of share price appreciation over the last decade. And while it appears that the stock price has actually peaked with only nominal upside predicted by analysts coming up to $561 per share, I would actually imagine that the growth over time will just continue to boom for Lockheed Martin. Now, in the meantime, shareholders will collect on a 2.26% dividend yield that's been growing by an average of 16% year over year for the last 20 years, while maintaining its 31-year dividend streak. But if, well, arms dealing really isn't your thing, I would imagine my next pick definitely is right up your alley for both share price appreciation and dividend growth, as we move into the technological advanced future with Apple, ticker symbol AAPL. Now, many have continuously said that Apple is dead and with little opportunity to actually grow, but I was always doubtful of that statement and remain highly doubtful of it. Apple remains the largest single holding within my portfolio, and thanks to their dominance in the smartphone arena, but also just continuous innovation elsewhere and now entering into AI, along with their slogan to literally think differently, I think Apple is just set up very well to be a long-term tech leader. And despite a challenging year in terms of sales, especially within China, Apple still delivered. And as a result, that share price remains up on the year by over 13%. But have a look here over the last decade, Apple soared by well over 888% worth of share price appreciation. Analysts only continue to foresee upside, climbing by another 14% from here to over $249 per share, all while Apple continues to boost their share buyback program to further increase the actual value for all shareholders out there. And in the meantime, dividends will be paid out thanks to that 0.46% dividend yield that has been growing by an average of 9% year over year, at least now for the last 11 years. However, there's also Alphabet, ticker symbol GOOGL. If you really can't make up your mind between Apple and Microsoft, this is a fine bet, and a matter of fact, it's really only become one of the top 5 holdings within my portfolio within the past few months. Of course, Google is the largest search engine in the entire world and also owns YouTube, the second largest search engine in the world. But also take note of the fact that Waymo is out there along with plenty of other initiatives that they have. Yet at its core, it's an advertising behemoth. It is and likely will just continue to be unstoppable in terms of advertising. And bottom line, given how their clean balance sheet is, I am just a huge fan of Google. When it announced that they're going to be paying dividends, it only solidified my decision to ramp up my position with Alphabet. Now, in terms of where it's trading right now, we're talking about $162 share price, down from $190 back in July. So a buy in my book before it bounces back, but zoom out to see over 450% worth of share price appreciation over the last decade. And on top of that, analysts remain very bullish, predicting over 26% worth of upside from here to hit a share price of $205.93 per share, while hedge funds just continue to buy more and more shares worth of Google, buying over 6.2 million shares last quarter, and Google even experiencing its biggest share buyback program this past June. However, all along the way, dividends will be paid out from Alphabet at a 0.49% dividend yield, just small but mighty and likely to continue to grow over time. Now, investors, there you have my picks. If I could only pick 7 dividend stocks to buy and hold forever, I'd love to know now your dividend stock picks that you would choose if you can only choose 7. So comment down below. Be sure to catch more insights right here. But before you actually click away, make sure you're subscribed, and I'll catch you in the next one.